What is up, guys? Welcome back to my channel. My name is David Hamlin, aka the Laptop Legend, and I just wanted to wish everyone a happy Friday. We finally made it to the end of the week, and we finally had a big green day in the overall markets. They managed to bounce back. It looked like they were going to be pretty ugly early on in the morning, but had a massive bounce back. Everything finished up like 2%. But I just want to talk about the fact that I don't think it makes sense to park your money in one of those ETFs and just let it sit there. To me, that makes no sense whatsoever, and that is like the most common advice you're gonna hear from all the financial gurus, everyone on YouTube. They say, oh, park your money in an S&P 500 index and let it earn 8% a year, 10% a year, whatever, and you're gonna be set by the time you retire. Why would you wanna earn a measly 10% a year? If you put in $1,000 in a year, that $1,000 is gonna be $1,100 if you earn 10% on it. I mean, it doesn't make any sense to me. Compound growth is such an insane power when you have insane percentages. And I've averaged, let me get the number right. My 1 year account returns are over 1,000%. Let me say that again. My 1 year account returns in my Roth IRA are over 1,000%. In that same time, let me check. In that same time, the S&P 500 is up 31%. So I'm going to dive into the numbers today and explain how I'm able to do this and why I think it's a really stupid idea to just park your money in the S&P 500 and just let it sit there. So let's dive into my computer and talk about it. All right, guys, so I'm here at my computer and you can see this is the graph for my investment account, my Roth IRA. And again, just going back a little bit, you can see it had a big dip there. It dipped down in March. It had a big dip and then it slowly went its way back up. There you can see. I don't know why it's not trying to select it. There you go. So I lost a bunch in March, and I just had my money parked in a mutual fund that was a little bit more aggressive than the S&P 500. So it ended up losing more in March, and then it actually gained it back slower. So you can see it gained a little bit back in April, gained it back, et cetera, et cetera, et cetera. And by the time I started actively managing my account, which I believe was in October, man, this thing was, it was at like $9,000, $8,600, something like that. And you can see I deposited $500, and I'm like, all right, I'm going to start actively managing this. There we go. You can see I deposited $500. I'm like, I'm going to start actively managing this. And, first month, $460. Second month, November, $4,671. And again, on an account of that size, that's like over 50% growth. That's over 50% growth. Next month, another $4,000. Put me at $18,000 at the end of the month. January, I took off, man. I took off. I almost doubled my account. Ended at $35,000. And at that point, again, once I was over $25,000, this is where the biggest change happened. Once you get over PDT, your account can take off. So I deposited another, you can see I deposited another $5,500 to make sure that there was no way my account was going to fall back under. And then, voila. Once I was over PDT, unlimited buying power, and you can see 77,000. I mean, it still blows my mind, guys. It still blows my mind how well February went. And when you're prepared for these opportunities, you can absolutely kill them. You can take so much advantage of them, guys. That was what, over 200% return on my account in 1 month. That's insane. And if I scroll down here, I'll remove my account numbers, but you can see, look at these returns. 3-month return of 644% versus the S&P is 5%. I more than 100x'd the S&P 500. More than 100x'd. That's insane. Year to date, 469% versus 1.7%. Are you kidding me? Are you kidding me? That's insane. And that's the thing, guys. That's the thing. I don't understand. I really don't understand why people would want to park their money somewhere where you're going to earn, 1%, 2%. It's the same reason like no one cares about savings interest rates at bank accounts because you just earn so little. The more interest rate you earn, the faster your money can multiply and grow because you can then use those $100,000 and earn a high percentage on that. And then it turns into $1 million. That's what's so cool about this, guys. That's what's so cool about it. And I already made a video talking about how I grew my account from under 10,000, like 9,000, to over 100,000. So I don't want to reiterate too much of that stuff. But the main thing that I want to express to you guys is that managing risk has gotten me to where I am. And again, so many of you guys really, really struggle with that. And it hurts me to see. Now, we had a nice bounce back day, but I think this week people really understood how dangerous trading can be if you don't manage your risk. Because I have friends who were up a ton in February. They had months that looked like this. I mean, I know people who went from 10K to 125K in February, and then they're back down to 40K already in March because March was so ugly. So you guys really got to lock in those gains and play it extra safe, because if you keep adding 1% a day, it really adds up. It really adds up. And today, what did I do today? Today I locked in $3,447.49 in profit. My biggest loss was like 51 bucks. My total losses on tickers on the day were less than $100. And that's because I cut losses so quickly, guys. I cut losses so quickly. But I just want to show you this because I think it's really, really cool. I think it's really cool that I can average 1,000% in a year. And honestly, I just started trading really full-time over PDT rule in February, if I'm being honest with you guys. So February was really the first month. So I think if we come back next February, we're going to see a percentage that's a whole lot higher than 1,000%. Can we see 10,000%? I have no idea. But I think it'd be cool. If I turn 10,000 into $1 million by the end of the year, I would be psyched. I think that'd be really cool, but we're going to need a hot market again. Because in March, I'm on the defensive mode. I'm just trying not to get my gains back. I'm not trying to make 10,000 a day. I'm trying to make a couple thousand a day max. That's my goal, to not take big losses. Because if you can study up and you're ready to profit when the markets are super hot, all you have to do is wait for the markets to get hot again. All you got to do is stick around and be around long enough to be able to take advantage of the hot markets when they come. And I don't know what's going to happen, guys. I don't know what's going to happen next week. Maybe, again, with the stimulus checks supposedly coming at some point, we could see a continued bounce. But it felt like every single OTC stock was up like 50% today. I mean, I'm looking around. We got 40%, 76%, 20%, 11%. I mean, I guess they're not all up 50%, but I mean, there was a big bounce in a lot of OTC stocks. Most were negative on the day to start off. And I think there's a lot of opportunities. The overall market did the same thing. But this is, I guess, the biggest thing for you guys. If you're looking for a way to grow your account, take it in your own hands. But you got to be disciplined about it. And I have so many videos on my channel. So if you're a regular here, you've probably seen them all. If you're in the Discord, you know exactly what we do. But if you're new to my channel, you're probably like, what is this guy on about? 1,000% in 1 year, he's just lucky. He's going to blow it all. It's not going to happen. It's not going to happen. And the reason for that is I manage my risk so tightly. If I'm in a stock that goes against me, I get out. I sell it. And I know some of you guys don't have time. There's people who don't have time. They have a big job. They work every day. They don't have time to manage positions like I do. And I understand that. So, I mean, if you want to park your money in the S&P 500 and earn 10% a year, like what is it? 14% a year? I guess over the last 10 years, 13% a year. I mean, that's pretty decent, honestly. That's better than I thought. But if you put it in right before a crash, that stinks. So maybe, wait for a big crash if you just want to park it somewhere. But I think if you have initiative and you're young and you have a high risk tolerance, why not try it, man? I've been able to help a lot of people, and if you're watching this right now, I'd love to help you too. Seriously. I'd love to help you get results somewhat similar to this. And this is not me, giving you guys a sales pitch. I have nothing to sell. Just watch these videos. Start to learn how to take matters into your own hands. You don't have to think like an average person who thinks they can just park their money and that's the only way to make money. Just park it in the S&P 500. There's a better way to do it, where you can earn way better than 30% returns. Way better than 13% returns. Again, look at that. 1,000% in 1 year. That's crazy, guys. That's crazy. And I don't want to go on and on, about this, but I mean, I'm very grateful. I'm very grateful. So appreciate all you guys' support. I just want to do a recap because, again, only at the end of the month do I get to see, what the actual percentage is. So seeing this 1,000% in 1 year is pretty cool. It's pretty cool to see. We'll see where I end. Where I end March, man. We'll see where I end March. I have no idea what it's gonna be. I'm just looking to defend. So that's it, guys. Hopefully this video is helpful. Super short one. Just wanted to share, kind of this perspective, inspire you guys a little bit. So if you found it helpful, if you made it to the end, please smash that like button. I don't have anything cool to say, but if you made it to the end on this 8-minute video, you can comment, ooh, what's a good animal? Wallaby. Comment wallaby if you made it to the end. And I'll see you guys in the next one. Until then, let's grow better together.